Good afternoon, MMTs. We are in full-blown earnings season, just to let you know. Yahoo didn't do that well. Listen, government volatility is playing its course. One of the things that we are happy to tell you is that at stockmarketfunding.com, we give out the analysis before the moves ever happen, whether that's a bull run or a bear raid to the downside and making money. Make money both ways. And we have given the complete analysis on every single top. We haven't missed one yet, and every single bottom on all of the indexes and stocks when they get overbought. And they have to have corrections, pullbacks. Now, this whole particular pullback was from an overbought level. We hit an overbought rally. We tested that 200-day. We came right up here where we said 1530. We had a huge reversal down 0.87% net change down on the day, down 133 points. Why is that? Because Washington, D.C. cannot get its act together. And the bulls have had a great year. It's the first year that we can remember since year 2000 when the bull ended. And they have this calendar year. We are in full swing in earnings and full swing of volatility. The lesson to be learned is we called the correction here, we called the correction over here, and we called this correction in calendar 2013. They're not real corrections. They're pullbacks is what they are, and to buy dips and sell back in. What I can say, though, moving forward for the rest of the year, there's going to be a lot of volatility. They're going to kick the can down the road out to February. They're going to have to deal with the debt ceiling. They were never going to default, believe me. All that was to create a lot of havoc and a lot of volatility for the bulls. We're in corporate profits. We've had that beautiful 1, 2, 3, 4-day rally off of the bottom. But let it be known, there'll be some more upside volatility in the Dow. But the Dow 30 components are all going to report quarterly profits. I will tell you that they will come out with a resolution. I will tell you that in the very short term from that 4-day rally, we said that the major wall of resistance was at 1530. Oh, yes, we did. Our trading staff around the world that we have in various different countries and U.S. residents and new MMTs, who market makers that we train on a daily level with live entry and exits at stockmarketfunding.com, you can put this volatility in your favor and really do well. And high frequency algorithms, there's lots that go into it. What I can say is that the support level, I'm going to show a weekly level again. We undercut the 10, it's testing that 20-week, 10-week. It came back below the 20-week. That's the pink line. But look at here. What has happened in this bull is that the 10-week has crossed over the 20. So that major bottom down here that we talked about when we said we were overbought at 15.7, we were overbought again at 15.3 in a very short term on a daily level now. So basically any upside movement is a time to sell into it. Sell into the volatility. Get short volatility. Make profits using the volatility so that when you hit that wall of resistance, I can show you on a 60-minute level in the Dow, here's what happened when we got to the top at 1530. We came down to very short-term support. It's going to be over here at 15,125. When we break that, we're going to come down to the next level. It's going to be 15,075 on a 60-minute level now. On the daily level, once again for the Dow, is that bull 200-day moving average is where we got a bounce. People came in and bought the dips. Let me tell you everything about the 4-day rally off of the bottom from the correction that we called for, is it was done on anemic low volume. Quarterly profits are coming out. Citigroup missed. Domino's Pizza missed. Yahoo's guiding down for the quarter. We have just yet to start these calendar earnings. from a 5-year multiple expansion that's going to contract. Yeah, 2014 is not going to be like 2013. So, Mr. Bulls, you better be careful. Don't be complacent. Don't be irrational, exuberant. Take the ranges and the good companies that do well, trade them well. Get the training that you need to trade volatility. Volatility makes money. Volatility makes money when it goes down. Volatility makes money when it goes up. That's what this business is about on Wall Street. Government headlines create volatility. Support level here on this is 15,000 is right here. That's the psychological level for the Dow component. A lot of more volatility coming. Earnings season is going to be soft. It's going to be weaker. Back in the July quarter, which was the previous quarter, a lot of companies got it down from those earnings reports. And now we're going to see what they're made of. There's a lot of softness in retail. There's a lot of softness in the fast food. There's a lot of softness in internet. And there's going to be a lot more softness coming in social media network stocks. Stocks that have had these huge returns that a bull hasn't seen. Last time we seen those kind of returns, you'd have to go back to 1999 up until we got to the top. Just remember that stockmarketfunding.com, when every one of these high-flying stocks were up here like the LinkedIn at 255, it traded down to 214. It was time to get short. It was time to buy put options. It was time to do a lot of things that you need to learn how to do. When that Amazon was way up there at the highs, same thing with Tesla, had a big correction down to 160. Then they were buying the dips. It was time to buy the dip. Same thing with Google. Google was way overbought, but it got way down there at the bottoms. They report earnings. Learn how to trade volatility. Understand to not be complacent. Understand when to buy dips and understand when to short at the highs. Dow Jones, big reversal today, all government induced.